First here, crypto veterans extend a helping hand to bear market newbies. As the bear market takes hold, experienced crypto traders are offering advice to those who are facing it for the first time. Twitter user DeFi Edge asked what advice they would give, and here are some of the responses. Guy Swan replied to a thread asking for advice on how to navigate a bear market, and his number one piece of advice was to buy Bitcoin. He also advised traders to hold their own keys and to ignore the market price, but to stack regularly. There are several factors that characterize a crypto bear market, including a sustained period of decreasing prices and lower highs and lows in response to news. In these circumstances, Eric Voorhees advised traders to take a hands-off approach. Voorhees believes that traditional traders don't have to take any active measures to succeed, as their seeds are planted and the wheat will grow in the spring. Alternatively, Voorhees suggests that crypto businesses should take measures to reduce spending and ensure that they have enough funding to last for 24 months. Nick Carter also weighed in with his advice for crypto traders. He advised the crypto community to direct its energy into developing things that people want. He also warned against assuming that everything will make a comeback, cautioning that some things die permanently. Yes, they do. That is good news to heed. Some cryptos will bounce back. We've seen it before with Bitcoin. It's dropped to $3,000. In 2020, and now it's low compared to its all-time high, but it's still back up. Some things just don't. There's a lot of crypto projects that come into the space. Some don't make it. A bear market is typically characterized by lower trading volume as investors hold on to their assets due to uncertainty. This can be compounded by negative sentiment from crypto skeptics, as well as market conditions such as backwardation, where the price of an asset in futures markets falls below the current market price. The key question for many investors is when the bear market will end. In an exclusive Cointelegraph interview, macro investor Raoul Pal shared that the bear market may end if the Federal Reserve halts interest rate hikes. The investor predicts that this may happen in the coming months. If the Federal Reserve halts interest rate hikes, the bear market may end. Macro investor Raoul Pal predicted in an exclusive Cointelegraph interview. He went on to say that this could happen in the next few months. What do you think? Do you think that that's going to happen? I know, even in the traditional financial realm, they're saying that inflation is going to continue, interest rates are going to continue to go up. Do you think that spike is going to stop? Do you think it's going to continue? What do you think in that realm? I'm not, nobody knows, but we can only guess. Up next here, SEC can't confirm if video of Bill Hinman is actually Bill Hinman in Ripple case. Bill Hinman, the former director of the SEC's Division of Corporation Finance, has become a key figure in the ongoing legal dispute between SEC and Ripple Labs over allegations of unregistered securities offerings via XRP tokens. At the 2018 FinTech Week conference, SEC Commissioner Hinman stated that the sale of ETH did not constitute a securities transaction. However, the SEC appears to be stalling and admitting the obvious in order to delay the case. Ripple Labs' legal team has filed a motion to compel the SEC to respond to 53 requests for admission on important subjects where there is no real dispute. Ripple is requesting that the court either admit the RFAs or that the SEC provides amended responses. With regard to RFAs related to Hinman, the SEC has not been able to confirm a series of instances that appear to be undeniable. The SEC has not confirmed the authenticity of a recorded interview with Hinman, during which he is visible and audible. Hinman made statements during the recording, but the SEC will not confirm if those statements were actually made by Hinman. The video that Ripple's legal team references was uploaded by the interviewer, Chris Brummer. The account is from 2016 and includes his name and profile picture. The picture links to his professional websites. The SEC has denied a request to challenge the authenticity of a video containing a mystery man, claiming that they are all at sea as to his identity. It appears that the SEC is intent on not conceding any information on the matter. It's hard now. Things can come out, someone's full face, voice, what have you, and they say, oh, I don't really know if that's legit. There's so many things that can be edited now. Really, that's going to eventually go away as being able to be proof of anything. A request to shield documents relating to Hinman was denied last month, so a letter motion was filed asserting that there is attorney-client privilege relating to internal details about Hinman's 2018 speech. Onlookers have suggested that Hinman's comments could work against the SEC's argument that the XRP token should be deemed a security. It has also been suggested that Hinman may have had a conflict of interest while working at the SEC, which could affect the outcome of the case. According to corruption watchdog Empower Oversight, documents obtained under a Freedom of Information request showed that Hinman had an undisclosed direct financial interest with the Simpson Thacher and Bartlett law firm, which is a member of the Enterprise Ethereum Alliance, or the EEA. John Deaton, founder of legal news outlet Crypto Law, told his 198,000 Twitter followers that if Hinman didn't submit the speech to conflict screening, it would be game set and match. So that's pretty interesting. A new update, I guess, in the Ripple SEC case. We haven't had a ton on them lately due to the Terra UST depegging, but there is that. We will continue to keep you guys updated on what happens with the Ripple case. Up next here, people want to be paid crypto to exercise in the metaverse from a survey. According to a new survey, over 80% of people would be more motivated to exercise if they were paid in cryptocurrency for their efforts. This is a great way to get people more active and improve their overall health. The fitness website FitRated conducted a survey of 1,001 Americans to gauge their thoughts on blockchain-related fitness technology. The survey found that a staggering 40% of people would be willing to cancel their current physical gym membership for one in the metaverse. Additionally, 81% of respondents would be more motivated to stay fit if they were incentivized by cryptocurrency payments. That's pretty interesting. We'll read more on it here in just a minute, but just that people, talk about, people are just online, they're on the computer, they're not getting out, getting active. So now it's like, we'll cancel our gym membership and get paid in crypto to exercise in the metaverse. A previous study conducted by the National Bureau of Economic Research concluded that monetary incentives alone would not be enough to motivate people to go to the gym. Speaks to our laziness. However, new research from FitRated suggests that blockchain-based financial incentives could be the key to getting people to hit the gym, with 63% of respondents agreeing that fitness motivation was a primary benefit of blockchain technology. Several move-to-earn projects are trying to capitalize on this. The appeal of gamification was the top reason that people would rather use blockchain-based financial incentives over standard monetary ones, with 83% of respondents saying they like how blockchain-based fitness apps make physical activity more fun. When asked about the types of fitness activities they would undertake to earn cryptocurrency, 49.1% of respondents said walking would be their choice. This was closely followed by cycling at 47.2%, with swimming coming in third at 41.4%. When it comes to choosing a cryptocurrency to be paid in, Bitcoin is the overwhelming favorite, with 72% of respondents opting for BTC. Ethereum is a distant second at 35.5%, followed closely by Dogecoin at 34.6%. Using blockchain technology, fitness apps are becoming more popular. One example is STEPN, an app that uses game-like elements to make running more fun. With STEPN, users can earn unique NFT shoes as they rack up mileage. This type of reward system is motivating users to stay active and is a great example of how blockchain can be used to encourage healthy behavior. Pretty interesting given the NFT space that's booming. The art sector is huge. Moving into crypto, I think that is a really cool way to motivate people and get them to use the platform. While STEPN is a well-established app in the fitness world, it isn't the only one. Step app, which runs on the Avalanche blockchain, is a competitor, signaling the push of Web3 companies into the $100 billion fitness industry. Well, that is pretty interesting. Let me know if you guys would utilize an app like that. I honestly haven't looked into that a ton. I have heard of STEPN, and I've heard positive things about them. Yeah, let me know what you guys think on if you would utilize that, if that would motivate you. Next up, Ethereum devs tip the merge will occur in August if everything goes to plan. Ethereum's long-awaited migration to a proof-of-stake consensus mechanism is looking set to occur sometime in August. Preston Van Loon, a core developer of the Ethereum network, told attendees at the permissionless conference that the transition to ETH 2.0, known as the merge, would occur sometime in August if everything plays out according to plan. Van Loon informed the 5,000 attendees that the team was planning to make the transition before the so-called difficulty bomb would degrade the network according to schedule. Echoing this sentiment, fellow Ethereum researcher Justin Drake stated that ensuring the merge went ahead quickly was a top priority, sharing his strong desire to make this happen before difficulty bomb in August. The difficulty bomb is a term used to describe the program coded into the Ethereum blockchain that intentionally slows down the network. This program was designed to encourage the transition to POS by making it more difficult for miners to stay behind on the proof of work chain after the merge. Pretty interesting. On April 11th, Ethereum developer Tim Bieko announced that the merge had been delayed once again. Bieko said that despite a successful shadow fork test, the merge would not be implemented in June as expected. Let me know how you guys think that this is going to impact transactions on the Ethereum blockchain, if at all. According to Bieko, developers need to act quickly to avoid the difficulty bomb, otherwise they will need to introduce yet another update to delay the bomb. The recommitment to the timeline is a response to this week's news that the Ethereum network will see a huge testing milestone with the Ropsten testnet merge set to be conducted on June 8th. The Ropsten testnet merge will see the POW test network combined with a new POS consensus layer testnet. This will simulate what will happen once the actual merge between Ethereum and the beacon chain finally takes place and Ethereum becomes a POS network. If the merge is completed successfully in August, the final planned upgrade for Ethereum will go live in early 2023. This upgrade, known as sharded chains, will allow the network to handle high volumes of transactions more efficiently. In the meantime, Ethereum will continue to use layer 2 networks like Polygon and Optimism. So that is pretty interesting. I mean, I'm not surprised at the delay, especially with everything going on in the space, whether that's related or not. In August, so they pushed back from June to August to launch that. We'll see how that works. Hopefully transaction fees are lowered by this, but you know, we'll see how that works. Up next here, South Korean watchdog reportedly fines Terraform Labs $78 million for tax evasion. Terraform Labs and its co-founder Do Kwon continue to attract more legal trouble in the wake of the collapse of the Terra ecosystem. After early reports of a possible congressional hearing and an investigation from Grim Reaper's Financial Crimes Unit, the crypto firm has now come under the radar of the National Tax Agency. According to a report published in Naver News, the South Korean National Tax Agency has imposed a $78 million or 100 billion won penalty on Terraform Labs and its co-founder for tax evasion charges. The report shows that Kwon was not happy with the crypto taxation in the country since last December and tried to liquidate Terra's domestic operations just before the Terra Luna crash happened. According to the reports, Terraform Labs first caught the attention of tax authorities in June of last year, when there were suspicions of the company dodging corporate and income tax. Upon investigation, it was revealed that Terraform Labs was registered in both the Virgin Islands and Singapore. The two subsidiaries were registered in different countries, but the place of actual management was in South Korea. According to Korea's Corporate Tax Act, the place of actual management is considered for tax purposes than the registered country. So I think having some companies registered in other like the Virgin Islands, Singapore, didn't work out very well for them. The tax authorities were alerted after Terraform Labs transferred Luna from Terra Singapore to Luna Foundation Guard. This was done in order to avoid taxes or make up for the losses of Anchor Protocol. Terra's Virgin Islands subsidiaries were fined a combined total of 8.13 billion won in October, including income tax, corporate tax, and other fines. In the aftermath of the Luna crash, South Korea's law enforcement agencies and policymakers have taken aggressive action against Do Kwon and his associates. A special financial crime investigation unit called the Grim Reapers of Yeodu has been recalled after 2.5 years to investigate the project. So maybe there's more to this than meets the eye with this Terra Luna crash. I don't know. I'm just saying, seems very odd considering the timing. And last but not least here, weaker dollar lifts Bitcoin to 30.7K as analysts eyes 60% BTC dominance. Bitcoin hit a high point over the past 48 hours as the US dollar weakened and gave bulls a much needed break. The BTC USD pair on Bitstamp reached a high of $30,725 according to data from Cointelegraph Markets Pro and TradingView. Still struggling to turn $30,000 into reliable support, the pair nonetheless avoided a deeper retracement, helping calm fears that last week's $23,800 capitulation event did not mark the bottom. The US dollar index dipped 2% in a week, providing the background for Bitcoin's relatively solid performance. This appeared to relieve some pressure on stock markets, with the S&P 500 finishing May 19th down 0.58% compared to earlier in the week, and the Nasdaq 100 less. As the largest cryptocurrency remains well below its all-time highs, those who joined the market late are facing significant losses, according to one analyst. Ki-Young Ju, the CEO of analytics platform CryptoQuant, noted in a series of tweets that newcomers to the market who joined last year are currently down 34%. Yes, absolutely. If you joined last year, you're down a lot. If you joined when Bitcoin was at $3,000, you're doing great. So yeah, I mean, as we read in a prior article, some people are suggesting to buy now. Buy Bitcoin now while it's on sale. We don't believe this is the end for Bitcoin. I know the comments are very, split. I want to know what you guys think. Key pointed to a chart here that showed the age of investments. He concluded that those who had only experienced one bear cycle before were now down 39%, while older coins were still in profit. As the market continues to develop more and more attention is being placed on Bitcoin as it becomes a more dominant force, altcoins are losing ground to Bitcoin, which is increasingly becoming the go-to choice for investors. After the Terra Luna debacle, many investors lost faith in altcoins and Bitcoin's market dominance began to increase. Some even predicted that altcoins would soon become obsolete. The popular Twitter account Income Sharks forecast that the dominance of Bitcoin could rise all the way back to 60%. The analyst noted that if Bitcoin's market dominance reaches 60%, it would represent a level not seen since March of last year. He warned that altcoins are likely to die twice as hard if BTC remains stuck in its current range or resolves to the downside. And here's that Bitcoin dominance 1-week candle chart from TradingView. That's pretty interesting. I definitely don't think all altcoins are going to go away. There are some very strong ones. I mean, we see that now, ones that are continuing to market, continuing to work on their campaign, continuing to build their teams, continuing to build their communities. I think those people who are operating strong in the bear market are here to stay for a long time. So definitely, if you're looking to invest now while crypto's on sale, do good research. Take a look, see what you're interested in, see who you think has a good team and a good platform behind them. How long have they been around? Are they just now getting into crypto? Have they been in for a while and they've rode the wave of bull and bear markets? That is all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.